this unit, and then we'll start, the new unit the following weeks. So today we'll go through and we'll discuss, few elements. Those left, most of the things we covered. And in term of, you already know because you learn, in level 5 as well. So we're doing level 4.
Yeah.
It's
Yeah, I
not
think
a
I have all those slides on budgetary control and the the sources of financing and those things. Yeah, from level 5, I think I have those.
Yes, it's the same thing. You could include it.
Yeah. Mm.
Hello. Okay, we'll start our lesson today then. Hello, welcome Chelsea. You okay?
Hi, I'm good, thank you.
I'm fine. How's snow in London?
It's not snowy here. It's quite sunny at the moment, actually. Bit frosty on the floor, but no real snow.
Okay, we had plenty here.
Oh wow! It's meant to snow.
So will be tonight as well more. Okay, so we'll start. So today we are doing lesson 4,
Yeah.
and 4 we will cover and we'll discuss, sources of finance, where we can get the money, budget and budgetary control. Rest 2 elements we already discussed, and we'll go through. Our discussion will be on bank reconciliation. So that's, I want to cover these topics during our lesson. So what do you think? What we learn up to now? Just recap first, and then we'll start our new lesson.
Last week we learnt about VAT and discount and the gross and the net VAT.
Okay, good.
And budgeting.
Yes, we learn about the budgeting. Well done. So we learn about debit and credit. How many types of statement we prepare in accounts?
4.
Okay, what those are?
Balance sheet, profit and loss account. My mind is off right now. Sorry.
Not balance sheet, profit and loss, cash flow statement, and shareholder are
Equity. Yeah,
equity
equity
statement.
statement.
Those we learned during our last lesson.
Mhm.
So today we are moving forward and we are going to learn about sources of finance. What do you think? What are the sources where we can raise the money from? If you start your business,
Yeah.
where you can get the money from?
Is it stuff like bank loans and investments?
Yes. Okay, bank loan.
Yeah.
Share capital.
Well done. Share capital.
Lease financing.
Yes, we do lease.
Debentures.
Yes, good.
Well, your own personal savings or savings from family.
Yes. Good.
Yeah.
Yes, your own saving, personal saving from family, and sell our assets, to get the money from, and which we can use it in terms of the finance. Okay, well done. So we'll discuss, different sources of finance, because each source have a cost as well. There are the benefit as well. So we are comparing which source of finance is better than other. Those are the source of finance, we need to go through. Okay, so debt financing is one of debt. Debt is something which has to be repaid. That could be
Mhm.
short term, medium term, and long term. Short
Mhm.
term normally 1 year, medium term 1 to 3 years, and the long term more than 3 years normally. But the duration some may be been considered different duration. Short term and medium term debt finance could be trade credit. We all aware of trade credit, yes?
Yes.
Like bank credit facilities could be overdraft and various other facilities.
Okay.
Bank loan, debt factory. What is meant by debt factory?
Hmm.
Um, I've not heard of that one before.
Debt factoring, like we have a invoices, we're supposed to receive money from our customer, and
Mhm.
those invoices we can take to the bank, and they can give us the proportion of, if my invoice is like, 100 pound, 50 pounds, so that could be, maybe they can say, okay, let's, 100 pound invoice, we'll give you 60 pound, and we'll collect from customer 100 pound.
Oh.
And some debt we can sell it. Normally, debt we can sell it. We can sell different company, and they will receive 100 pound, but they will give us only 60 pound. Like, debt collection companies in UK especially. So, like, debt collector, they have a debt factoring they're offering to the company.
Okay.
Invoice discounting is exactly the same sort of discounting invoice. We are saying to them, if you pay early, we'll give you discount.
Voices.
We're
Okay.
supposed to receive 100 pound, you pay early, we'll charge you 90 pound, and 10 pound less, that will give you discount.
Okay.
So hire purchase, what is meant by hire purchase then?
Is that where you hire a product or a property for a certain amount of time? So you could hire a video camera for a project you got in your business, and then you you pay for the hire fee, but then you return it at the end of the lease.
Yes, well done, great. That's a hire purchase, we are hiring it and we can return it. It could be two types further. Sometime, end of the contract, asset become our own asset. But
Mhm.
sometime, our contract depend upon the what sort of the contract we have. Hire purchase normally is sort of the rental agreement, we are hiring things. And leasing, what is meant by lease?
Is it where we loan something but it's not ours, we don't own it? So you could lease a business property, someone else owns it and you pay them to lease the business property area.
Well done, you're right. Le- Lease is normally is a long-term sort of agreement. Could be 3 years, 4 years, 5 years, 10 years. Normally is a long-term lease. Leasing could be types of lease. One is a finance lease, one is operating lease. Finance lease, from the day first, asset will be our own asset. We'll do all the repairing and maintenance of asset. Like we are getting car, we are on the leasing, on the finance lease. If we have a finance lease, car will be day first, our own car, but we are bear all the losses. Anything happen with the car, we will be responsible for it. But if we have operating lease, in term of the operating lease, the company will repair it. Yes, after maybe 12,000 mile or 14,000 mile, we can replace it. Any risk and reward will be bear by the owner, or the title of the car will be to the lease company. But when is a finance lease, the book, which is DVLA book, will be our own name from the day first. That's
Mhm.
all. That's only difference. Finance lease and operating lease.
Mhm.
Okay, next we're looking my computer today. Okay. All being these explained, that factoring what is meant by, like we discussed. Any question?
No question.
No questions. Mm.
Is example of invoice discounting, hire purchase, leasing. Uh, we're not doing activity, but you can, in your own really, you can look around, complete activity on the short or the medium term debt finance. In what circumstances would be each source of the finance will be most appropriate? So you have to decide, keeping in view of the advantages and disadvantages each, if you have a finance lease, so day first we are bearing all the risk and reward, value will go up, we will get benefit. If the value go down, we'll bear the loss. So we can discuss, so you could decide it. And then if we have a finance lease, we can claim capital allowance from the tax office, but we can't claim as an expense from HR. But if we have operating lease, we can put in a profit and loss account as an expense. Whatever rent we are paying, rent is an expense in a business. So that will help us to save the money, so we can decide which finance is better than other. Okay, long-term finance for the debt which is normally 10 years, but not more than 30 years normally. Lender or the creditor who is the debt are subject to specific repayment dates. We can decide lender have no control over the borrower other than the loan agreement. A rate of interest is the payable could be fixed and flexible. Interest is charged before profit treated as an expense. Usually secured, some loan could be secured against our asset. Some could be floating. It could be changed, The capital is committed to a project for a longer period of time, and they must have to provide us money for longer period of time. Long-term debt financing could be mortgage, term loan, bonds, debentures, convertible loans, sales and leaseback. Okay, we all aware of mortgage, yes?
Yes.
Term loan, we know the term could be, yes, certain period of time,
Yes.
which is
Yeah.
normally more than 3 years. And bond. Anybody heard about bond?
Yes, heard about it, but always confused about it. So could you explain it a little more?
Yes, sure. Bond is a long-term debt, which is a piece of paper that could be secured against the asset. You have a property, you have a land, or the government have a lot of asset, government buildings, government lot of, they have a asset as a reserve. They can issue the bond to the public or bond to the other government to raise the money, and that bond could be secured. Bond could be, the face value of the bond may be written 100 million, but maybe we will get 90 million. So
Okay.
10 million when the bond will be mature after 10 years, so they will
Mhm.
give back 100 million worth of the bond, and we will give them 100 million.
Okay.
So that's normally is a bond. It could be secured, it could be unsecured. Normally bonds are secured in. So when you giving money to somebody, bond is secured. Again, they can say, they have a machinery, they have a land, they have this and that asset. Normally
Mhm.
secured. Debenture. Different private company, they issue the debenture. Debenture is a sort of long-term investment, a piece of paper which is written the value of the debenture. It could be secure against the company assets as well, like bond, but slightly bond, however, we just bond value could be higher, but we are getting less money. But in term of the debenture, could be have an interest on it. Like,
Okay.
we are paying 6% interest, 10% interest. On the bond, normally is on the maturity, the money will get back. Like, you are investing 5 year, you giving 500,000, but you will get 700,000 back. That's a bond. But debenture, if you're giving 500,000, but you will get interest 10% every month or 5% every month, that's shit. Or
Okay.
5% a year, 10% a year, depends to our agreement. Convertible loans are the stock. The stock or the loan we could convert it. You can convert it to, if you're giving the loan or borrow the money, you can give them shares. We can convert one type of the loan to other type of the loan. We call convertible loan stock.
Okay.
Okay, sales and leaseback. We know sales and leaseback.
No.
We can sell it, asset. They can pay us money and we can lease it back in later dates when we need it. Yes,
Okay.
but the asset they can keep it, but we can use it. We can pay the
Hmm.
like a rent. So all these been explained: mortgage, term loan, bond, bond maybe, debentures, secure, start of the bond, but it could be fixed and floating change. Risk reducing restrictions, limited, of course, dividend. We know about dividend.
Yeah, I think I heard about dividend.
Yes, which is return on investment. Like if we have a shares, we think the return in shape of the dividend. A convertible, we can convert it into other sort of the loans. Sales and leaseback, here we can sell assets usually to the finance institution, and the seller give us the ownership right of the property to the property, and will then we can arrange the lease of the premises from the new owner. So each have advantages and disadvantages. So in your own, you can think about and we can discuss about advantages and disadvantages. Like if we have a bond, it's a long-term investment, need a big money, so bond could be higher value of it. But when is a
Mhm.
debenture is a low value, it could be a fixed return good after 10 years we are paying back. But in term of the debenture, we have to pay every year. We need to spend the cash flow problem could be. So we need to look around the sources of finance. Which one have a more advantages than this. If we have a mortgage could be repayments and the normal mortgage finance, which is asset become our own asset. We carry on paying interest. Interest could be changed. They have advantages and disadvantages as well.
Mhm.
Equity mean the shares. We can issue shares to the public and we can raise the finance. We can raise the money. Equity, debt financing always cheaper than equity, because if you invest in shares is a very risky business. Share value come up and down. Other thing, maybe the dividend we not get because the shareholder only paid after meeting all other business expenses. Any money left then will be distributed between the shareholders. So there is
Okay.
no fixed charge, no repayment is required. Director has a great control on the amount and the timing. Share is listed in the stock exchange and can be easily disposed of. The key feature of equity could be public issue is quite expensive. Issuing new share
Mhm.
to the new shareholder is a dilute the control, control issues.
Mhm.
the vote, they can change the management. Dividend are not taxable deductible income. So higher proportion of equity can be increased over the cost of the capital. In terms of the equity financing, reverse venture capital. Anybody heard about venture capital?
No.
Okay.
We have in the UK lot of companies. They big. Anybody heard about business angels?
No.
Like Richard Branson and various others, Alan Sugar and various others. Those those people very rich. Those are they have a company. They put their money in the venture capital. When the other company they need money, they can invest it. Lot of investor, big investor, they put the money together in a
Mhm.
pot and then they invest it. Another company has a and the
Okay.
company we can say in simple words they lend money to others as a venture capital is a like EDF project which is the electricity in France in the UK they are atomic electricity plant they are going to install and that's the lot of company they invested as a venture capital. Even China invested in the project is as a venture capital. So
Okay.
private placing, alternative investment market, coded company, those can listed companies in the stock exchange. Reverse internal finance include the retained profit providing main source of the new capital. Retained profit, the profit we not distribute to the shareholder, we can retaining it, we can use it as a finance. Venture capital provide equity capital to small or growing companies. We can look
Mhm.
around the private placing, well-established company, widen their shareholder base and without going the stock exchange listed, they can go private investment, alternative investment market. We can look around, different young to the small qualified benefit and full listing. Listing company mean those are listed in stock exchange. Unquoted company mean not listed in the stock exchange, but they could issue the private shares. Shares have only been paid advantages and disadvantages of equity finance. Equity financing is normally expensive source of finance compared to the debt financing. In the debt financing problem is every month or every certain period of time you have to pay interest on it. Sometimes it's difficult to raise, but in term of equity, you only need to pay dividend when you earn the profit. Don't earn it, you don't pay it. But it
Okay.
could be motivates. We can't raise big money. Shares normally values less. We need maybe we will lose the control. They can change the management, and the issue could be.
Okay.
Any questions?
No questions.
No questions.
So just we need to discuss about normally with one finance could be debt, other could be equity financing. So that's a big source of finance. Could be short term, long term, medium term. Now next we look at the budget. We done in the previous lesson we discussed about the cash budget. Budget is a plan expressed in the financial and other quantitative terms. Extend forward. Budget is a plan. Budget is provide the set nav. Budget is alpha. If we don't have a budget, we don't know where we spend, how much we spend, when we'll spend. Budget is widely used, all type and the size of the business. It help us to planning and control the activity. If we have a budget, then we can compare the performance, budgeted and actual. So all these are, we can discuss about. Budget can be linked with the objective of the company. Whenever we'll make the budget, we always need to look around the sale forecast. If the sale is growing, we need more money, we need more cash, we need more material. Yes.
Yeah.
So material usage budget, material purchase budget, and labor, how much workforce we require. If it's a higher sale forecast, we're expecting to sell more unit, we are expecting to grow our business. So we need a more labor for it, and the labor budget we can make.
Mhm.
So budget will define precise target. It could be cash receipt, payment, sale, stock, labor requirement, or specific requirement. Reason for producing budget. why we produce budget. We, for the planning purposes, for the coordination, we can coordinate between one department to other department. We can communicate how much money we have, how much money they have, where they spend. If we'll stay within a budget, that will help us to motivate people. Yes, they can be rewarded again. Their performance
Mhm.
control could be in place, and we can evaluate, how they perform compared to the last year, how much money we paid more, what's happened, like we are injecting more money in an NHS, waiting time, is it improving or reducing, the patient waiting time. So all we can look around against the budget. If we don't have a budget, then we can't, VAT
Okay.
input and output. We already learn about what is meant by input tax. What is meant by input?
Oh Lord.
Okay. Sorry.
Okay, the input tax is the percentage that um when a supplier buys goods and services from another supplier.
Hmm.
Okay, 1 second.
No problem. Okay. Input taxes is on the purchases. Any VAT we will pay, we can claim back as an input tax. And when we are selling our goods and we are collecting the money from our customer, that is called output tax. And the output tax we need to pay to HMRC. Those are liabilities. So during
Yeah.
our last lesson, we discussed, input and output
Yeah.
tax. Okay. So next we are looking at the bank reconciliation. What's come in your mind, bank reconciliation?
Um,
Okay, bank reconciliation is where you are matching um the entries in the cash account as
Hmm.
against the bank statement to see similarities or any discrepancies and to balance them.
Well done. Yes. So bank reconciliation, where we'll see the cash position which we have in our record, and we matching with the bank record with the bank transactions. Those
Mhm.
need to be matched end of the month. If they're not matching, where we have a difference, either we need to make the adjustment in our cash book, or we need to make adjustment in our bank book. We
Mhm.
call the cash book is mean that we are holding and we have a record, like in UK we are getting the checkbook. Always there
Yeah.
inside we have a little boxes where we filling how much money we deposit, when we drawn, we are carry on filling, and the bank carry on doing electronics as well. They record and they send us statement. Then we can match it. If not match, then we find the reason why not match. Maybe the bank charge the charges, they did the debit in their bank account, but we didn't credit in our own cash book. Does it
Mhm.
make sense?
yes.
Because
Yeah.
when we are saying the money increase in the bank account, are you getting your salary? We always saying my money is credited in my bank account. When the
Yes.
bank do credit, we do in our cash book debit. Because debit and credit should be equal. So if not equal, if bank deducted some charges and we not aware of, it mean in the cash book we have a higher balance, but in the bank actually have a less balance. Sometime we have a
Mhm.
direct debit and we not aware of direct debit being increased, because the company not send us any notification of the increase of the direct debit. So money being debited from my account to direct debit, and when I look my record with the bank record, that's not match. So they did debit and I should do credit to balance it. It's same amount. Does it make sense?
Yes.
Yes, it does.
So we are looking today this element, cash transaction and bank reconciliation. And I put it link in my slides, these ones. So let's go through, and you will see. So what we can do, please can copy this link. We can copy this link, and the link we can paste here. Don't know what's happened with my laptop today. Let's copy now. Okay, so and then we'll start. This will be automatically, maybe the flash. Then click and we'll do activities. Okay, in your assignment, really you need to write about, and you can add some examples either from this document or and you can find. This is cash book, and we mean given the cash book is, you can read, is mean the debit balance in the cash book and credit balance supposed to be bank statement, and then we'll match them each other and we'll draw. So now if you look here in the cash book, we have a balance at the start of the month which is called balance brought down. Then we receive the money from our customer. Then we make the payment. Payment is come on the credit side of the cash book. And then we have a 900 balance that could be balance brought down for the next period because our credit side is a higher than debit side. So they are asking what you expect the balance on the bank statement to be on the 31st of the 12th and which side of the bank. So in the cash book is on the credit side. What will be happen in the passbook, which is a bank statement?
What would you expect the balance of the bank statement to be? Balance brought down
Is on the credit side, and what will be at the 31st of the 12th. So which option I pick? Don't worry, just say debit or credit.
Credit?
Which one, debit?
Yeah.
Because if you look here on the credit side of the cash book is the balance given on the credit side, yes?
Yeah.
Yes? The bank will be?
Okay,
debit.
So one has to be debit. One
So
has to be
opposite,
credit.
yes?
Yes.
Okay.
Okay. Then is a discussion about outstanding could be unrepresented check, those not represented. Bank errors, how we can adjust it. So this is a bank reconciliation, balance as per bank statement. Add outstanding lodgement, the bank errors, less unrepresented check, so we are tally balance according to the cash book. So now we have this is a bank reconciliation. We have a balance 1460. Then they saying we have a check totaling 110 paid into the bank on the 30th June, but not showing in the bank statement. So what we need to do?
We need to minus that unpresented check. Well, that £10.
You add our
£10.
check paid into the bank. Yes.
Yes.
Okay, yeah, we add it.
We'll add it.
Not in the statement.
Okay, so what about unpresented check.
We minus it.
And bank errors.
Um,
Bank incorrectly debit. Yes.
yes.
So what we'll do?
Okay. So we have to take it out.
Yes.
And add it back. Oh, okay.
Yes, because we did debit. In bank debit mean is a negative. Yes, we do minus. When we do
Okay.
bank, it's mean addition. Yes.
Mhm.
So in this way, so you can, what are the bank debit, direct debit, and errors? We can adjust them. So this is our cash book. So we have a balance on the debit side. Yes. Then they
Yes.
say the direct
Mhm.
debit 56 has been entered into the, not entered into the cash. Cash book. So which side will goes? The money being debited in the bank account
Mhm.
to direct debit. Yeah, direct debit mean the payment.
Yeah.
Mhm.
Credit.
Which side will credit side?
Yeah.
Yeah.
Then they are saying a check receipt from customer has been omitted from the cash book. Omitted, not entered in the cash book. We receive a money from
Yeah.
bank charges being charged. Bank charges some charges.
Have not yet been entered into the cash book. Okay.
Then we are looking which side is a higher. The
Mhm.
balancing figure goes on the other side.
So the
Mhm.
Yes. So in this
Yeah.
way, we can carry on tally our bank balance with the cash book.
Okay.
So, so this way, please, you can just play. If you don't do it, for suppose I'm doing wrong, yes. Oh, so luckily I pick another right, yes, even not ready. Okay, when you can doing like these examples, yes,
yes.
like
Mhm.
I'm so I'm doing wrong now. You will see there it will explain you here.
Okay.
Yes.
So just we can add some examples.
Mhm.
What is the bank reconciliation? Yes,
Yes.
in our
Yeah.
assignment. So because of course this course we are learning very basic there, but at least give us some idea, yes, of how in real world things work.
Okay.
Because you're not technically you're doing a course which is not a purely accounting course, but within that business you should have a awareness, how the accounting works in the business.
Okay.
Any question?
No question.
Uh,
Okay. So let's we'll check what we cover up to now. We did 4 lessons.
cash budget.
Okay. So first are clarify the purpose of accounting and finance, context of tourism or the hospitality organization. So where we looking the purpose of accounting. Accounting means the systematic record of business transaction in the book of account. So is it any value? Yes. Is it really need to? So your discussion need to be, and you can look around some in some journal. I'll send you some books as well. But in our slides, we already discussed about what is accounting mean and systematically record of business transaction in the book of accounts. Yes. We
Mhm.
prepare account, we
Mhm.
monitor, we check, explain the difference between sole trader, partnership, and public. Yes, which I already included today lessons as well. Some slides again comparison between sole trader partnership, what is about. Just like one person business, you can even add some figures, like hospitality industry is a lot of is big small businesses they normally run on sole trader. Medium side normally is a partnership sort of. Large, is normally considered as a limited company or public limited company. Yes, ownership and all we discuss, in our lessons as well, and I put the slide there at the end. Okay. Then next, explain the difference between private sector and public sector.
Mhm.
Private sector and public sector, private ownership per public ownership. So that's really the discussion. The private sector could be where anybody really can buy and sell their shares. Public sector normally is owned by or controlled by the government. Yes, like you can give some examples of the bank. Like we have a Yorkshire Bank and some other banks. Their shares most of is controlled by the government. In hospitality industry, some like a lot of discussion going around like train tickets every year or the fares is increasing, so we need a more public control ownership instead of private ownership because private them more focus on the profit. So then next we discuss about the software,
Yes.
so where we
Mm.
discussing and assessing the role of it, so we can book around the client, we can track it, our booking, pricing, record keeping and all. We can plan double entry bookkeeping, which we discussed during, yes,
Mhm.
is a record of business transactions through systematical way where we discuss about bookkeeping in means, yes, keeping debit and credit rules, bookkeeper when bookkeeper job finish, accountant job start. Okay, calculate the VAT which we calculated on the uh, purchase and the sales. I already gave you the question bank.
Yes.
Can add example, prepare cash receipt and payment and bank reconciliation. Cash receipt and payment, I send you the cash budget. Yes, where we
Yes.
Yeah.
put it, the previous lesson. And today we discuss about bank reconciliation, mean the matching, yes, the balance with the bank.
Yes.
File balance,
Mhm.
we discuss, how you can debit and credit. Asset goes on the debit side and credit. I already gave you one handout, which is with the answers and the question where you can
Yeah.
the comprehensive income, which is the profit and loss and the financial position. Any question you can pick it as example or you can change the figure. And
Mhm.
today we discuss about sources of finance available for the businesses. Yes, the
Yes.
way the company can raise the funds. We discuss
Mhm.
about the budget and budgetary control, and we already prepare the cash budget, which I send you the template, so you can make the budget and include in your assignment. Okay, that's all your. Thus, today I'm going to send you what is meant by budget and budgetary control, one chapter of the book which you can reference in your assignment as well, or
Mhm.
any other book,
Mhm.
whatever you think the book name of the books is given within this brief as well, which is on the Moodle. So please, if you have any
Okay.
question, ask me. You do a bit rough draft up to next lesson, and next unit start, I'll go through again and I'll see your whatever you will wrote, and I'll go through with you as well.
Okay.
Okay.
Anybody any question?
No questions.
No.
So next week, I'm not sure which unit you like to run. So today almost we finish this. So if anything you think need to be addressed, we can. But most of the things we already discussed. Okay.
Mhm.
Okay.
So I'm not sure which subject you like most. You can pick according to your choice. You like marketing, HR, uh,
We could do marketing, yeah. Academic and professional development.
okay. So
What is the academic and professional development unit? What is that?
okay, where I'm going to use some, it's called reflection models, academic skill, how we can write it, and like using, not using first person in academic writing more,
Okay.
and a SWOT analysis, your strength, weaknesses, which area you want, you think you're weak, and which area, how we can improve, what sort of activities we can undertake. Will took and thus those sort of discussion will be.
Okay.
And professionally, if you're in an hospitality industry, how you can develop yourself as a professionally. You should be good in communication. The software. Those are really useful in terms of working in hospitality industry. You should have a diverse knowledge. You should have a more the cultural awareness. These sort of the things.
Okay.
Because we're looking more towards hospitality industry as a professional person in hospitality industry.
Yeah.
What sort of the skills and competencies required in particular profession? Okay, and we have this unit, events management as well. How we can manage different events. Development of tourism and hospitality industry. How much is worth of? What development happened? How much is growing? How many jobs they are contributing towards the economy as a hospitality industry? What are the risks there involved? How we can tackle it? How we can plan it? So these sort of the discussion in your last unit. So
Mm.
first, unit first could be tourism and hospitality business management, if you want.
Okay.
Second
Yeah.
is the service marketing and the customer service, which is more marketing we are discussing.
Yeah.
Mhm.
And the third we already finished. The fourth is academic, and the fifth is the events management, and sixth is the development of tourism and hospitality.
Mhm.
Okay.
So which one you think? Service
Yes.
marketing.
Yeah, marketing.
Yeah. Mhm.
So we'll do marketing first. Okay, then we can, or if you want business management.
Yes.
If you want to see what's inside it.
Yeah, we can go with marketing.
Okay, we'll decide. We'll go for marketing first, and then we'll go maybe this one. Yes,
Yes.
Yeah.
this is quite similar. Public sector, private sector, problems, organization, explain the special analysis. What is quite similar. Okay, no problem. Will next lesson we'll go through the service marketing.
Okay.
Excellent.
Okay, anybody any question? You will get all the recording. I'll carry on uploading here. You will see there. Yes.
Yes.
Okay.
And I'll upload more resources under each lesson, relevant wherever will be appropriate, and
Mhm.
then you can carry on writing assignments, please. So we'll crack on then, huh? And
Okay.
we'll do next week last lesson. I think so. The week after will be 2 weeks holidays.
Okay.
All right.
Okay. Have a nice time. Have a good weekend.
You too.
Okay. Same to you.
Okay. Thanks.
Thank
Bye.
you. Bye.
Mm.